Japan's new prime minister is stepping into a role that doesn't just guide a nation, it quietly shapes the global economy. So what kind of economic leader is Sanae Takaichi? Takaichi's economic thinking is shaped by crisis. She believes Japan must prepare for global shocks, supply disruptions, energy shortages, security risks, and economic pressure from rivals. Her approach favors strong government involvement in strategic industries rather than leaving outcomes entirely to markets. Instead of slow reforms, she supports decisive investment in areas Japan depends on: advanced manufacturing, energy security, defense-related technology, and digital infrastructure. This signals a shift away from purely defensive economic management toward a more active, state-guided strategy. For global markets, this matters. When a major economy signals higher government spending and strategic investment, investors adjust expectations around growth, debt, and inflation. Markets are now asking one question: will Takaichi's strategy revive Japan's economy or increase financial risk? Why is the Japanese yen suddenly back in the global spotlight? The yen is one of the world's most traded currencies. For years, it weakened as Japan kept interest rates low while other countries raised theirs. A weak yen helped exporters but increased import costs, especially for energy and food. Under Takaichi, currency markets are watching closely. Her push for stronger economic security and industrial investment could support long-term growth. But higher government spending also raises concerns about inflation and debt sustainability. If investors believe Japan is moving toward faster growth, the yen could strengthen. If they fear higher debt and loose policy, the yen could weaken further. Either outcome has global effects. A stronger yen makes Japanese exports more expensive and can pressure global competitors. A weaker yen lowers export prices, intensifying competition in cars, electronics, and machinery. The yen is no longer just a reflection of Japan's past. It may become a signal of Japan's future direction under Takaichi. How does Japan's new leadership affect the world's largest economy? Japan and the United States share one of the most important economic relationships on Earth. Japan is a major holder of U.S. government debt, a key investor in American industries, and a crucial trade partner. Takaichi strongly supports the alliance with the United States, not only militarily, but economically. Closer coordination on technology, supply chains, and defense production could deepen economic ties between the two countries. But stronger alignment also means shared risks. If Japan increases defense spending or industrial subsidies, it could affect trade negotiations and global competition rules. American firms may benefit from joint projects, but rivals could face tougher competition from a more coordinated Japan-US economic bloc. Under Takaichi, Japan may become an even more central economic partner for the US. But that partnership could reshape global trade dynamics. Is Japan moving away from free trade and towards something more controlled? Takaichi's economic worldview emphasizes security over openness. That doesn't mean Japan is closing its borders, but it does suggest tighter control over critical imports and exports. Japan is likely to prioritize secure supply chains for semiconductors, energy resources, rare materials, and food. This could involve diversifying trade partners, reshoring production, or investing in friendly countries. For global trade, this creates ripple effects. Countries that align with Japan's strategy may see increased investment and cooperation. Others could face reduced access or higher barriers. This shift reflects a broader global trend, but Japan's scale makes it especially influential. Trade under Takaichi may become less about efficiency and more about control, resilience, and long-term survival. How are global investors reading Japan's new leadership? Financial markets react not just to policy, but to confidence. Takaichi's decisive style could reassure investors who want clarity after years of uncertainty. Her focus on national strength and planning appeals to those who value predictability. However, concerns remain. Japan already carries one of the highest public debt levels in the world. Increased spending without clear growth results could worry bond markets. Investors will watch closely how Japan balances stimulus with fiscal discipline. Stock markets may benefit from increased government investment in key industries. Bond markets may scrutinize borrowing levels. Currency markets will react to every signal. Under Takaichi, markets are not calm. They are alert, calculating, and ready to react. What does Takaichi's Japan mean for the rest of Asia? Japan plays a stabilizing role in Asia's economy. Its investment supports infrastructure, manufacturing, and development across the region. A more assertive Japan could redirect capital flows towards strategic partners. Countries that cooperate closely with Japan may gain access to technology, funding, and trade advantages. Others could feel pressure as competition intensifies. If Japan strengthens its economy and currency, it could shift regional power balances, especially in industries where Japan remains dominant. Asia's economic future may tilt depending on how aggressively Japan chooses to lead under Takaichi. What could derail Japan's economic ambitions? Japan's aging population remains its biggest challenge. Fewer workers mean lower growth potential. Higher social spending strains public finances. No economic strategy can succeed without addressing this reality. Takaichi's focus on automation and productivity could offset some pressure, but results will take time. Meanwhile, debt continues to rise. Global markets understand this risk. Japan's credibility depends on whether leadership can turn spending into real growth rather than long-term burden. Demographics are the silent force that could limit how far Japan's economic power can reach. So, what is the single move that could define Japan's global economic impact? It comes down to whether Japan commits fully to becoming a strategic economic power, not just a trading nation. This means reshaping industrial policy, strengthening currency credibility, and aligning economic goals with national security. If Takaichi succeeds, Japan could regain influence over global supply chains, currencies, and investment flows. If she fails, markets may see Japan as overextended and vulnerable. This decision will shape how investors, governments, and companies treat Japan for decades. Japan's first female prime minister may not just lead a country, she may redefine how economic power works in an unstable world. Sanae Takaichi took office during a moment of global uncertainty. Inflation, slowing growth, shifting alliances, and fragile markets define the world she now operates in. Her leadership introduces clarity, but also risk. Trade may become more strategic. The yen may grow stronger, or more volatile. Markets may reward decisiveness or punish overreach, and the global economy will adjust, whether it wants to or not. Japan has entered a new era, not just politically, but economically. And what Japan's first female prime minister does next may shape the global economy far beyond its borders.